All right, so today we're tackling a topic that always sounds kind of like a riddle to me.
Oh, yeah.
Reverse mortgages.
Yeah.
It's like, okay, so it's a mortgage,
Uh-huh.
but the payments go in reverse.
Right.
What does that even mean for like a regular home? We've got a whole stack of articles and research here to like break it all down.
It's a term that definitely, I can see why it causes people to scratch their heads a little bit.
Yeah.
It's essentially a way for homeowners who are 55 and older to access the equity,
Oh.
what they've built in their homes, without having to sell it or make monthly payments.
Okay.
But as with like any financial tool,
Right.
there are always important details and considerations to kind of unpack.
So it's not just like free money appearing out of thin air.
Right.
Like there's got to be more to it.
Exactly. It's not free money.
Okay.
Think of it this way. Instead of you making monthly payments to a lender,
Right.
the interest and fees are actually added to your loan balance each month.
Yep.
And then that balance becomes due when what's called a maturity event occurs.
A maturity event.
Yeah. And that can be either selling the home, moving out permanently, or if the homeowner passes away.
Okay, that makes sense.
Yeah.
So how much can someone actually borrow with a reverse mortgage? I imagine it's not like a set number.
You're right. It's not one size fits all.
Okay.
The amount that you can actually borrow is influenced by a few factors,
Okay.
including your age, the current value of your home prevailing interest rates, and the specific type of reverse mortgage you choose.
Wait, there are different types.
Yes,
So it's not as simple as just saying, I want a reverse mortgage.
precisely. There are several different options,
Oh, wow.
each designed to address different needs and financial situations.
Okay.
And just to pique your interest a little bit, you can receive the funds in a variety of different ways too,
Really?
like a lump sum, regular monthly payments, a line of credit, or even a combination of those.
Wow. So many options.
Mm-hmm.
So it sounds like you really need to consider what type of reverse mortgage. Yeah.
Is right for you.
Absolutely.
But before we get into all that, who is even eligible for this in the first place?
Sure. So there are some ground rules to make sure that, this is responsible lending.
Right.
The most basic requirement is that you must be at least 55 years old.
Okay, 55 or older.
You also need to own your home outright or have significant equity built up.
Okay.
And naturally, the home needs to be your primary residence.
Right.
So no vacation homes or rentals would qualify.
So I can't just buy like a beachfront villa and finance it with a reverse mortgage.
Well, not exactly, although there is a specific type of reverse mortgage that is designed for purchasing a new home,
Oh, really?
which we'll explore a little bit later.
Okay.
But to get back to the eligibility, the type of property also plays a role.
Okay.
Single-family homes and townhouses are generally eligible, and some condos might qualify as well.
Okay, so there are some nuances to it.
Yeah.
It seems like there's a whole spectrum of reverse mortgage options,
Absolutely. And we can start with the most common type.
which is called the Home Equity Conversion Mortgage, or HECM.
HECM.
These are federally insured, offering a level of security and consumer protection.
So HECM is kind of like the gold standard.
You could say that.
Okay.
They do come with some trade-offs, though, like higher upfront costs compared to other options.
Okay.
You also need to work with an FHA-approved lender to secure HECM.
Gotcha.
Yeah.
So what if someone is looking for a reverse mortgage that's more tailored to their specific needs?
Okay.
Something beyond just like that standard HECM.
Right. Then we venture into the realm of what are called proprietary reverse mortgages.
Okay. Proprietary reverse mortgages.
These are offered by private lenders
Okay.
and are often a good fit for higher value homes.
Okay.
However, it's important to note that they might come with fewer consumer protections because they aren't as tightly regulated.
So potentially more risk, but maybe more flexibility.
Exactly.
Okay. Interesting.
And then we also have single-purpose reverse mortgages,
Single purpose.
which are usually offered by nonprofits or government agencies.
Okay. These are designed for very specific uses, like funding essential home repairs or covering property taxes.
Oh, so if I need help fixing my leaky roof or like need a hand with those ever-increasing property taxes, this could be an option.
Precisely.
Okay.
And then there's the reverse mortgage for purchase,
Reverse mortgage for purchase.
which, as the name suggests, helps seniors buy a new home using a reverse mortgage.
Now that one sounds really interesting.
Yeah.
Can you elaborate on that a little bit?
Certainly. So it involves combining a reverse mortgage with a down payment,
Okay.
allowing you to buy a new home without the burden of monthly mortgage payments.
Wow.
This can be a game changer for people who want to downsize, move closer to family, or just find a home that better suits their needs in later life.
So instead of being tied to a home that might have become too big or too difficult to manage,
Right.
this opens up the possibility of finding a place that's truly right for them.
You got it.
Wow.
And we shouldn't forget about the reverse mortgage second.
Reverse mortgage sec, which is specifically for people who already have a first mortgage on their home
Okay.
and are looking to access additional funds without adding to their monthly payments.
Oh, wow.
So their existing first mortgage remains entirely separate.
There's so many options.
I know it's a lot to take in.
Yeah, I'm starting to see how reverse mortgages can be incredibly versatile.
Yeah.
Like they can address a range of needs and situations.
Uh-huh.
But before we go any further, I think it's important to take a step back
Okay.
and look at the bigger picture here.
Yeah.
What are the overall benefits and potential drawbacks
Right.
we need to consider?
Yeah.
Because, I mean, no financial decision is perfect, right?
You're absolutely right. Every financial tool has its pros and cons.
Right.
And reverse mortgages are no exception.
Okay.
Let's start with the good stuff.
Okay, good stuff.
The most obvious advantage is that a reverse mortgage can provide you with additional income during retirement,
Oh, okay.
allowing you to kind of maintain your financial independence.
Especially with how things are going now, you know?
Yeah.
Costs are rising constantly.
Right.
So that added financial cushion
Yeah.
can really make a difference.
Exactly. And since you're not making those monthly payments,
Right.
it really frees up your cash flow,
Okay.
allowing you to, cover other expenses, pursue your hobbies, or just, enjoy life a little bit more.
Yeah, so instead of feeling financially constrained, you have the freedom to spend your retirement years on your own terms.
That's the
Oh,
idea.
I love that.
And of course, you get to stay in your home,
Right.
which can be incredibly valuable both emotionally and financially.
Yeah, I can imagine the comfort and familiarity of staying in your own space, surrounded by, memories and belongings.
Absolutely. That sense of stability and independence
Yeah,
can't be underestimated, especially as we age.
for sure.
And let's not forget that flexibility of those disbursement options we talked about earlier.
Right.
You can tailor the way that you receive those funds to fit your specific needs and goals.
So it's not just one size fits all. You have control over how you access the funds.
You got it.
Okay.
Another significant advantage is that reverse mortgages are generally non-recourse loans.
Non-recourse.
Now, just to make sure we're all on the same page, can you explain what non-recourse means in this context?
Yeah, so non-recourse basically means that you or your heirs will never owe more than the value of the home,
Okay.
even if the loan balance grows larger than the home's worth.
Right.
So it's a really important protection for homeowners and their families.
You're exactly right. So it's a key safety net
Yeah.
that's built into reverse mortgages.
Okay, so we've got increased financial freedom,
Yeah.
the ability to stay in your home, flexible disbursement options, and that non-recourse protection.
Right.
But I know there must be some downsides.
Of course.
Like, what are some things we need to be cautious about?
Well, as with any loan, there are costs involved.
Okay.
And with a reverse mortgage, the loan balance actually grows over time
Okay.
due to accruing interest and fees.
So it's not just free money forever.
Unfortunately not.
Okay.
And while you don't have monthly mortgage payments, you are still responsible for all the usual homeowner expenses,
Okay.
like property taxes, insurance, and keeping up with maintenance.
Okay, so those responsibilities don't just disappear.
No, they don't.
You need to factor those ongoing costs into the equation.
Exactly.
Gotcha.
And it's crucial to remember that with a reverse mortgage, you are gradually using up your home equity,
Right.
which could have implications for your heirs.
Yeah, that's a good point.
This is a trade-off that needs to be carefully weighed.
So it's not just about your own financial well-being, but also the impact on future generations.
Absolutely.
That's a really good point.
And with that in mind, let's transition into the financial nitty-gritty of reverse mortgages.
Okay.
We've covered the basics, explored the different types,
Uh-huh.
touched on the pros and cons.
Right.
Now let's delve into the costs involved.
All right, let's do it.
And see what we're really dealing with here.
Okay, sounds good. When we talk about the costs of a reverse mortgage, what are we really talking about?
Well, it's helpful to think of it in two stages.
Okay.
Upfront costs and then ongoing expenses.
Okay.
Kind of like, if you were buying a car, you have the initial purchase price
Right.
and then the cost of maintenance and fuel over time.
Okay, so there are costs involved right from the start.
Exactly. Upfront costs typically include what are called origination fees,
Origination fees.
which are essentially the lender's fees for processing the loan.
Okay.
These can vary depending on the lender and the specific loan terms.
So it's kind of like a processing fee to get the ball rolling.
You got it.
Yeah.
And if you opt for a federally insured HECM loan,
Okay.
you'll also have mortgage insurance premiums to consider.
Mortgage insurance premiums.
Yeah, these premiums help to protect the lenders in case the loan balance exceeds the home's value.
Okay, so it's kind of similar to the mortgage insurance you might have with a traditional mortgage?
Yeah, that's a good way to think about it.
Okay. Are there any other upfront costs to be aware of?
Yes, you'll also need to factor in an appraisal,
Okay.
inspection of your home.
Right.
These are, standard procedures to assess the property's current market value and condition.
Okay, so those are the initial hurdles to clear.
Right.
What about those ongoing expenses you mentioned?
So the main ongoing cost is going to be interest.
Okay.
Just like with any other loan,
Right.
the interest rate can be either variable,
Variable.
meaning it fluctuates with the market,
Okay.
or fixed, meaning it remains the same for the life of the loan.
So choosing between a variable and fixed interest rate is an important decision.
Yeah, it really depends on your individual risk tolerance and financial goals.
Okay.
A variable rate might seem appealing if interest rates are low,
Right.
but you need to be prepared for potential increases down the line.
Right.
Whereas a fixed rate provides predictability,
Mm-hmm.
but you might miss out on potential savings if interest rates decline.
So it's a balancing act. Between potential savings and like peace of mind,
Exactly.
what other ongoing expenses might come into play?
With some reverse mortgage options, there might also be a monthly servicing fee.
Okay. A monthly servicing fee.
Yeah, this covers the administrative costs of managing the loan.
Okay. So it's essential to really do your research,
Yes.
compare lenders and loan options.
Yeah,
Understand all that fine print before making any decisions.
absolutely. Understanding the full cost picture, both upfront and ongoing,
Right.
is crucial to making an informed choice
For sure.
about whether a reverse mortgage is right for you.
Okay, so now I think we're all eager to get to the grand finale here.
Okay, the grand finale.
When does the bill come due?
Well, with a reverse mortgage, there are a few specific events
Okay.
that trigger loan repayment.
Right.
The most straightforward scenario is if you decide to sell your home.
Okay, so if you're selling, the house proceeds from the sale would be used to pay off the reverse mortgage. What if someone decides to move out permanently, but doesn't necessarily sell the house?
Yeah, that also triggers repayment.
Okay.
Remember, a key requirement for a reverse mortgage is that the home must be your primary residence.
Right.
So if you move out for good,
Okay.
the loan terms kick in and the loan becomes due.
So even if you're like moving in with family or relocating to a retirement community, the loan would need to be addressed.
That is correct.
Okay, and I know it's kind of a sensitive topic, but we also need to talk about what happens if the homeowner passes away.
Right.
What are the options for their heirs?
So in that case, the heirs have several options.
Okay.
They can choose to pay off the loan and keep the home perhaps as a family inheritance,
Okay.
or they can sell the home and use the proceeds to cover the loan balance.
So they have some flexibility to decide what's best for their situation.
Exactly.
But what if the loan balance is higher than the home's value?
Well, that's where that non-recourse feature we discussed earlier becomes so important.
Right. Oh.
If the loan balance exceeds the home's value, the heirs aren't responsible for that difference.
Oh, okay.
They can simply walk away,
Yeah.
and the lender will absorb that loss.
That's a huge relief for families,
It is
knowing that they won't be burdened with a debt they can't handle.
absolutely one of the key safeguards
Right.
built into reverse mortgages.
Okay, so we've covered a lot of ground today, from the different types of reverse mortgages,
Uh-huh.
their eligibility requirements,
Right.
the benefits, the drawbacks.
Yeah.
We've also delved into, those often overlooked details of costs
Yeah, the nitty-gritty.
and repayment scenarios.
It's been a comprehensive exploration.
It has, and this is just the starting point.
Exactly. We've only just scratched the surface.
We've given everyone like a glimpse into this world
Yeah.
of reverse mortgages, but
Right.
it's like we haven't given them the map to actually get around.
Exactly. And like with any major financial decision, it's essential to consult with qualified professionals.
Right.
They can guide you through the complexities and really help you determine if a reverse mortgage is even right for your situation.
For sure, knowledge is power.
Yes.
And in this case, understanding all those like nuances of a reverse mortgage can really empower people
Absolutely.
to make those informed choices
Yes.
about their financial future.
Yeah. It's about, taking control and feeling confident in those decisions.
Exactly. And speaking of knowledgeable people.
Yes.
You mentioned earlier a certified reverse mortgage professional
Yes.
named Zayer,
That's right, Jay Zayer.
who was featured in one of our sources.
Yeah, he really stood out. He did in that article.
Yeah, he holds the certified reverse mortgage professional designation.
He does.
Or CRMP.
Yes, CRMP.
And he was generous enough to offer his contact information.
He was.
For anyone listening who wants to kind of delve deeper.
Yeah, wants to learn more.
Into the world of reverse mortgages.
Absolutely.
So if you're feeling intrigued and want to explore those possibilities, Jay can be a valuable resource.
Definitely.
And his contact info is included in the show notes.
It is.
So feel free to reach out.
Please do.
This whole deep dive has highlighted how reverse mortgages aren't just like a one-size-fits-all.
No.
Not at all.
They're more like a toolbox.
Yeah, a toolbox filled with options.
Filled with different options.
To address a variety of needs.
Exactly. And it's fascinating how this financial tool can be tailored to individual circumstances.
Right.
Whether it's supplementing retirement income, purchasing a new home,
Yeah.
or simply just accessing the equity you've built in your home.
Right.
It really makes you wonder, given the rising cost of living and longer lifespans,
Yeah.
if reverse mortgages could become, like, even more common.
Right. Could they become more prevalent
Yeah.
as part of retirement planning in the years to come?
That's a really thought-provoking question.
I think so. It really challenges traditional notions
It does.
of homeownership and retirement planning. Absolutely. And it's a conversation worth having.
It is.
We encourage all of you to continue exploring this topic.
Yes.
And see how it might fit into your own, financial journeys.
Exactly.
So remember, knowledge is power.
It is.
And with the information that you've gained today,
Hopefully.
you're well equipped to navigate the world of reverse mortgages.
That's right. Don't be afraid to ask questions.
Right.
Seek guidance from those qualified professionals.
Yes.
And weigh those options carefully.
That's all for this deep dive into reverse mortgages.
Yes.
We hope you've enjoyed the journey.
We did.
And as always, keep
those minds curious.
Yes.
And those questions coming.
Absolutely.
Until next time.
Until next time.
Stay informed.
Stay engaged.
And keep diving deep.
That's right.